Hello, this is Surya Saha, and welcome to the Insurtech podcast, the platform to spread knowledge on insurance innovation, digital disruption, and entrepreneurship. Our website, insurtech.com, and we are available on Spotify, Apple, and Google. Today, we will discuss on the topic the role of AI in modernizing actuary. And for now, I'm delighted to welcome our guest, Halil Guveng, who is the lead analyst for life insurance actuary at Boston Consulting Group. So, Halil, a warm welcome to the show.
Thanks, Surya, for having me.
So, Halil, you being in the actuary industry, you know, considering the rapid disruption in insurance, how do you see the future of actuary getting transformed by AI? And do you think is there any room of human and machine interaction in actuarial science in general?
So we know that the current pandemic has demonstrated that the premise that the past is an answer for the future is not always true. Yeah, this assumption has been a cornerstone of assessing and pricing the risks in an insurance. So traditionally, insurers have created risk profiles by establishing various risk levels
Right.
using statistical and actual models
Yeah.
based on historical data. But to compete successfully through this rapid change, insurers must enhance their ability to look ahead, so to say, not behind, and to build this kind of predictive view, high frequency data resources, and artificial intelligence capabilities. Insurance can make better decisions even during periods of market upheaval. And it's also true that insurance companies have long profited from the high barriers to entry afforded by their control of historical laws and claims data, for example. But recently, we see that the Insurtechs have already crushed these barriers by using the external data, especially the
Mhm.
data that comes from high frequency or live feeds. Even some startups now collect tons of car crash data and repair cost images to manage claims, for example. So tracing has been, for example, become a leading strength in the auto insurance market. And we can clearly say that there is no guarantee that these insurtechs will restrict themselves to this area when so many other insurance verticals are ripe for picking.
Right.
And as companies invest in AI, we see that they will be well served to follow, we say that 10-20-7 principle. And according to this principle, insurers would, in the long run, direct 10% of their efforts toward extracting value from algorithms, especially those that power predictive or prescriptive models. They would then direct the next 20% to cultivate, to build the technology that enables them to capture, store, deliver, analyze internal and external data. From there, they can take guided actions. And regarding personalized offers, push notifications, and more in real time. The remaining 70% will be invested in business processes and people. So the experience points out that investing in alone and cutting edge technologies and algorithms is absolutely insufficient for obtaining significant business advantages. So we say that companies must take time to rewire decision making and operations to extract maximum value, and therefore invest in human capabilities to make operational and organizational changes. Uh, Many insurance executives are also worried about impact of AI transformation. That's clear, which will have impact on their workforces. So we can foresee that algorithms and robots will replace humans. It's a fact, and AI will result some cutbacks in some spots. For example, recent BCG research indicates that policy management positions will shrink around 70% and claims by 40%. But at the same time, we say that tech departments will grow around 50%. What I believe is that the actuaries won't disappear, but as AI evolves and the insurers gain access to new information, data scientists will be also able to do a surprising amount of the work that actuaries do today. Which brings me to another point that we see that nowadays some job descriptions are being redesigned to reflect increased responsibilities and ensure workers are hired, developed, rewarded, recognized, and compensated accordingly for more complex and often far more valuable work. Actuaries, for example, again, are increasingly working with AI to predict and identify the risk. Some actually professional associations have already started to require training on those core machine learning and data science skills, partially because the distinction between an actuary and a data scientist is gradually disappeared. And as an uh, as an actuary, AI help with risk assessment. Many organizations are now redesigning job descriptions with complementing non-technical skills like judgment, decision making, adaptability, and more importantly, change management.
Right. Yeah. You know, where do you think we are right now in terms of AI and actuary in insurance?
So what we see till now is the focus is on predictive modeling and claim analytics, the areas in which artificial intelligence, machine learning generally are used for pricing, product development, claims analytics, and fraud detection. A very small portion of focus is on traditional actuarial areas, such as reserving and capital management, asset liability management, and investment. And also, we struggle to hear much evidence of implementation on those areas, which could be a natural result of a lack of data quality. For example, if a company wanted to use AI to carry out balance sheet optimization, then the company would need to have a clearly defined quantitative capital management framework, as well as tools to estimate the balance sheet across wide ranges of different strategies. But now and into the future, while it is straightforward to require the recalculation of balance sheet under many different investment strategies, in practice, this can be really difficult for all but simplest businesses. Uh, we saw that from several surveys. It is apparent that nearly all actuaries have an high level understanding of AI with the concept and the ideas. But what also we see is that more than half of those are lacking experience in applying, especially the concept in practice. Therefore, I would name the no gap and lack of talent maybe as the biggest struggle when it comes to apply AI by actuaries. So it's good to see that the structure of skilling avenues is available by actuaries, by different platforms like YouTube. There are lots of forums in the internet. It's totally increasing, but apparent that the profession needs to continue its work to provide opportunities to members, but employers also need to encourage and support actuaries to develop those skills. Um, and work. It's clear, but it will be also particularly important to encourage the qualified and the more experienced actuaries to develop their skills in these areas. I believe this would close this no gap which I mentioned and would fire the speed of AI application in the actuarial profession.
You know, it's interesting to know about developing the skill sets in actuary because I think that is one of the areas that are often undiscussed when it comes to emerging technologies and how it actually can fit in there in insurance, right? So, you know, some great points you have mentioned there, and talking about the benefits of using AI in insurance. is quite clear. But do you sense any challenges from the industry when it comes to acceptance of AI to transform the actuarial function? It can be, from any aspect of the business like people, culture, cost, and environment within the insurance sector.
Very valid question, Surya, and is a great question. Um, let's compare maybe the revolution, the industrial revolution, and also the AI revolution. So the industrial revolution did not happen overnight. We know that,
Right.
and also the same goes for AI revolution. So we already see that most calculations are performed by softwares designed for example, pension valuations, pricing and reserving of insurance products, predictive modeling, etc., which was once done on paper by actuaries. So and we know also the actual profession is regulated, and therefore also the actuaries have regulated roles, and those health roles likely won't change overnight. Insights guided by AI could give us actuaries chances to enhance the insurance world. As profession, I think we must strive to adjust in the face of change. We must
Right. Yeah.
admit it, innovate, and take on these new opportunities. I think it's really vital to adapt us to the change and move forward as a profession. But another challenge can also occur, as you asked, from the aspect of business, which could be really harmful to insurance customers. One of those is, I think, to mention indirect discrimination, which occurs when a person is still treated unfairly compared to another person under implicit inference from their protected characteristics based on a neutral practice such as proxy variables, opaque algorithms. If you want to a little bit deep dive into this one, AI can help insurers to assess the risk, detect fraud, and reduce the human error in the application process. But algorithms can also be biased. This means insurance decisions can be based on misleading or biased data, potentially leading to unfair discrimination against clients. While many insurance companies sidestep already using and gathering sensitive or potentially discriminatory details and argue that the output delivered by analytics algorithms without using discriminatory variables is unbiased and based only on statistical evidence, indirect discrimination can still occur. Some common examples of such proxies, like postcodes, credit information, education level, and occupation. Many of these are already regulated in the US, for example, mainly because their negative impact on minorities and lower income individuals. However, we can say that with the advent of AI and the big data, limiting or prohibiting the usage of these proxies does not alone mitigate the risk to indirect discrimination, since some proxies are no longer easy to specify when using the AI. And to my knowledge, still there is no existing legal framework with clear borders of definition in any jurisdiction explicitly assessing indirect discrimination in the insurance industry. Therefore, what I would say that this is a little bit a gray area, and to overcome this challenge and make it crystal clear to everyone in the industry, it's really essential to have a further cooperation of insurers with regulators and also with the advice of actual societies to mitigate such a risk, not to lose customers' trust.
Right. Yeah. That's quite interesting to see how AI would actually transform the actuary. We have seen the other value chain of insurance being touched by technologies like AI, but it'll be very interesting to see how actuarial science actually gets influenced by this technology, and how the industry as a whole, especially the talents part, uh, also gets the benefit of AI in transforming actual science. So thank you, Halil. It was a
Absolutely.
fantastic discussion, and thank you for sharing your thoughts today. It was a true delight to have you as our guest.
Thank you again, Surya, for this valuable time to discuss on this topic. It was a real pleasure for me.
And lastly, to wrap this up, thank you for listening and see you at our next episode. Take care and stay safe. Goodbye for now.